Live here from the studio. We welcome Alan again. Thank you for joining us.
Can't get rid of me. Happy to be here.
Cannot. And Matt, thank you for joining us too.
Thank you so much for having me. Very excited.
We're going to talk about some really interesting stuff, but before we begin, we do have to read out as disclaimer, this AMA is for informational purposes only. Redbelly Network is a blockchain infrastructure provider and does not endorse or promote any financial products or investment opportunities. All opinions expressed are those of the speakers. Please do your own research and comply with applicable laws in your jurisdiction. Now that we've got the fun stuff out the way, let's get into this because Matt, many people might not know about you and what it is that you do. I'd love for a bit of an intro there, but just before I begin, I'm just going to set the scene. Nothing fancy or anything, just a couple of hundred companies that you guys at Liquidize have onboarded, 20,000 users, over $1 billion AUD in the system, and the first to tokenize Aussie equities, Australian equities. Just starting off small, this is great. What more can you tell us about yourself and Liquidize?
Yeah, great question, Mark. The number one thing I'd like to call out is that one of the most exciting things we're doing here is that Liquidize is being taken over. The business has been taken over and is being transformed to a new business called Tokeniser. We're super excited about that because Liquidize was a fantastic, the technology continues, the platform continues, everything is still the same under a new branding, of course, but it allows us to expand the scope and opportunity which the platform and what we're doing can cover. One of the key things about the Liquidize platform is it's been in the market for a couple of years now. It's being used by over 20,000 users on a regular basis. It supports companies ranging from startups all the way through to companies that have recently delisted from the ASX. So we have companies on us that have a couple shareholders starting off very early, all the way through to a couple thousand shareholders who expect a level of quality, service, visibility, and accessibility that you'd get if you were trading on a company that is listed on the ASX. So it's been proven to be a robust, secure, and very user-friendly platform. And that's why the change and update to Tokenize is very exciting because it allows us to really lean in to, I think, one of the key unique value propositions that Liquidize always had, but we're really now able to bring to the fore with Tokeniser, which is the tokenization of assets. And that means also not just Australian equities, but also funds units. It could be managed investment schemes. It could be real estate assets. It really widens the scope, opportunity, and breadth of what the platform can do, will do, and also most importantly, allow those users on the platform to engage with and utilize.
Amazing. Alan, what does it mean to bring something like this to the fore?
Yeah, so obviously at Redbelly, we've been always focused on how do we bring financial services on chain. And Liquidize has always been a great partner of Redbelly, and they've been focused specifically at the time on private equities. We saw the opportunity at Redbelly to broaden that and obviously focused on other alternate assets, but the key to everything is the registry. So who holds what? In a regulated environment, the bearer instrument is, other than cash, pretty much illegal now across every jurisdiction. So there is always regulatory required a registry. And so we were working with Matt and saw the opportunity with some of our other partners to greatly accelerate that adoption by helping them with already having a tokenized registry. So as Matt said, we've acquired Liquidize, or the registry business and their customers, and we've now rebranded that into Tokeniser, which is much more focused on a full cradle to grave, if you like, of asset origination, asset servicing, and obviously registry, and then what everyone wants to hear about, the secondary trading opportunities that will be unlocked. But we've got to start with, let's get the assets on. And Matt will talk about what they've been doing in terms of proving up atomic settlement and or subscription and redemption, which is ultimately what the blockchain is valuable to do. But from our perspective, we announced recently our partnership with IQEQ.
Yes,
they're
amazing.
A global trustee, 800 billion US under management. And they're like, we know we want to do this. We need to move from spreadsheets and callbacks and PDFs and signatures. We need to move into a digital world where we can reduce fraud, but we have no capability, skills, or tech to be able to do that massive uplift. And this is where Matt's team have been doing it for years. And now we can bring kind of that robust experience to the scale of these customers, which ultimately unlocks a bunch of transaction for Redbelly. I think the other thing that's important, the reason we made this acquisition is we actually want to start having a business model for Redbelly that isn't gas.
Okay.
So the
Yeah.
other big thing that's
Yep.
floating around in the market right now is
Yep.
what's the revenue model and how are you buying back my tokens?
Yeah.
And so what this will allow us to do is
Yeah,
the token is
true.
still required to provide the utility of the network, provide
Yep.
the security of the network. But as a revenue model, it's going to be a slow and hard burn. We've worked that out. So what
Yep.
this allows us to do with Liquidize is have a revenue model that's tied to assets under management. So we can now start monetizing the TVL, if you like, rather than the transactional revenue.
Amazing.
That will come. But what that'll do is give Redbelly the longevity of starting with tokenizing, do the kind of legwork around the asset administration,
Yep.
which creates revenue on an AUM basis, which gives us
great.
the ability to be profitable as an organization that uses a blockchain. And then still continue to invest in scaling out the ecosystem and bringing other partners. That doesn't change, but we need a sustainability play to make sure that we survive through various bear markets and cycles and kind of bootstrap that network. And so we thought that this was the perfect opportunity to bring Matt and the team in to accelerate that. So we'll now have that revenue model like other projects to be buying back.
You said the cradle to grave. I prefer the farm to table of crypto sort of thing and tokenize and assets in general, because it's blockchain, it's normal technology, as we spoke in previous episodes, spreadsheets even. It'll just be the tech that runs payment rails and tokenization rails. But Matt, back to you. Let's talk about now. It's Tokeniser, right? So this is pitched as I'll read it out here. It's a registry, tokenization, and servicing platform. But that's great. But in your own words, what's the problem in the market that you're actually trying to solve?
Well, I think there's very much two separate but interrelated problems.
Okay.
There's very much what's the problem that's facing the market in general, and then there's also what's the problem that solutions around blockchain solutions that want to bring the strengths of blockchains, what problems are they facing? And Tokenizer is very much about marrying the two in terms of bringing a solution to that. So let's start with the second one, because this is a Redbelly podcast, so we want to talk to how Tokenizer is transforming Redbelly.
Yeah.
We've always known that tokenization is the future. Real-world asset tokenization has been a very hot topic. It's been something a lot of people want to do, but the question has always been, how do we do this?
Yeah.
And that's very much why Tokenizer exists. It's meant to be that gateway, that ability for those issuers. And as we've seen with our experience with companies and soon to be in working with funds and trustees on the same massa, we want to give them a platform that's familiar, easy to use, that very much traditional, in this sense, Web 2.0 style interface, but at the same time is powered by and enables them to essentially tokenize their assets. So it makes it easy for the issuers to essentially get onto the Redbelly network. It makes it easy for their shareholders, note holders, unit holders, whoever has invested in these issuers to get onto the Redbelly network. It makes it easy for those tokens that are being minted and issued via the Tokenizer platform to be transacted on the Redbelly network. I think that's something which is going to be a great unlock for the network, because it's a problem that, if you look at the wider ecosystem, most platforms focus on bespoke white glove style solutions when it comes to real-world asset tokenization. Whereas we strongly believe that a standard one-size-fits-all model, as we've proven already with our company's business, is the way forward for this space that's really going to transform it. Back to the other side, which is the commercial problem, we're very much keen to look at people, processes, and payments. That's very much what we think, the 3 Ps, and that's the problem that are facing trustees, facing all issuers really. It's how do we give a modern, easy to use experience for our people, whether that's the people behind the trusts or the companies administering these registers or providing these services. It's about the investors who want to be able to log in, see their holdings, download their statements, whatever it is. They want to do it. They don't want to call someone up and say, can I get this, or receive it in the post? And it's about those processes as well, right? So simple things, issuance, transfers, more complicated things such as communications, such as statements and tax reporting, and even more complicated than that, distributions or redemptions or processes around subscribing to and receiving money from these issuers. And of course, it's about payments. And I think payments is one of those areas where when we talk about payments, we're not talking about traditional credit cards or bank accounts. We're talking about full-on real-time instant transactions, instant settlement, atomic swaps. This is the stuff that's unlocked by blockchain technology, but people and those processes need a place to make that easy, transparent, and also interactive. And that's, again, that's the problem. And ideally the unique value proposition that tokenizers bring to this market.
Love it. People, processes, and payments. It's a great acronym. I can see it on shirts already. The 3 Ps. But why tokenization actually matters, like beyond the hype. Let's get into that. There's been noise in the tokenization space for years now. What convinced you that this was finally the right time to build, let's call it a real production grade servicing platform?
So I think there's been 3 key macro trends that have meant that now is the right time. And I've been in this space for the better part of 10 years. I've worked with and dealt with blockchain technology for a long time. And even I have seen that the space has matured enough now, adoption has increased enough. And I think the key point here is financial institutions are now taking the technology seriously enough that if you walk into, say, a bank or a traditional institutional issuer, for example, they won't laugh you out of the building. So I think just that key macro trend of adoption
That's a good sign.
of the technology, where they actually listen to you and actually say, yeah, that's a good idea.
Yeah.
You're not just someone who's just walked off the street and spouting a dream. That's, I think, number one, why now is a good time to be doing this. Number two, the technology has matured. Redbelly is a fantastic example where you're talking about a public blockchain that isn't public in the sense of anything goes. There's restrictions, there's compliance, there's identity verification. It gives confidence to the issuers, who are ultimately the consumers of Tokeniser, the users of the platform, that their data, their systems, their investors aren't going to be compromised by coming onto this. And that really brings us to the final piece, which is we strongly also believe that the regulatory environment is now ready for it.
Yeah.
When we started this journey all the way back many, many years ago, we couldn't even mention the word token because people would immediately assume that we were doing some sort of weird Bitcoin thing that would entail them losing all their private information to someone over in Russia. But now, because of the regulatory environment's more willing to listen and discuss it with us and talk about it openly to the public, people are more willing to listen to and have the conversation with us to then begin that journey, let alone receive all the benefits it can go to. A fun fact is, with Liquidize, it took us over 3 years to get to the point where we had the ability to service things via AFSL. It was a significant process that really only because those macro trends were macro trends that we got to that point. I feel if we tried that conversation 6-10 years ago, we could have spent those 10 years talking to the regulators and we wouldn't have got there. So that's why I think now is the right time and a good time, and probably the ideal moment to seize when it comes to launching a solution like Tokeniser.
I love it. The timing is everything, absolutely. And you said that like they're worried about, oh, how do we know this is not like a crypto scam where a guy in Russia is going to do this? And I'm just saying Russia, it could be any country really. But it's like, we're worried about this new technology that's going to get us scammed from a guy in Russia, but we'll stick with our old technology that will get us scammed from a guy in Russia. So the irony is like, it's interesting their timing, Alan. What do you think about that?
Oh, look, I definitely think that we're seeing a shifting of the tide. The regulator, even Joe Longo's been out recently, the National Press Club, just talking about the opportunity and why Australia now needs to move. That's a very different position. Obviously, we've got the regulation here that's coming to bear, but I think what we've also got a lot more clarity is, as I said, that's the regulatory risk that kind of made it a non-starter. People understood the value proposition, and to extend what Matt was saying, the opportunity across an asset's life cycle is reconciliation, it's audit, it's manual processes. So the registry is the key of who owns what, but it's actually all the processes around it that are really expensive. And if, as an asset moves from origination to servicing to secondary trading, there's a bunch of reconciliation problems. And so I'll call it for what it is. Our Tokeniser strategy is basically the figure strategy from the US, which is, they've obviously built a very successful business originating HELOC loans. It's listed on the NASDAQ now. You can go and check it out and read their S1, because they've got the same problem. He had a blockchain, he loved blockchain, but no one would use it. And so he solved it himself, but from a product-led perspective. And so they now are the #1 originator of HELOC loans in the US, but they built a vertically integrated stack. So they originate the loan, they do the asset servicery, they built the funds to fund the thing, and they've got a market to do the secondary trading. We're doing the same thing here, but for Australian-dominated assets in the first instance. We'll obviously follow our partner IQ globally around the 26 jurisdictions, but certainly we want to own the Australian market and own liquidity as a first move. But the strategy here is, and you will see us do this in early new year, we'll originate the first tokenized mortgage in Australia. So we'll so we're going to go to the originate the asset the right way. So not paper, not kind of replicate the old way but let's originate a natively digital asset that can then start, who owns it, sits in a registry, and then how it gets packaged up into an asset-backed security and turned into notes and sold on to secondary markets. That is currently different systems. The asset originator has one database and they send the money to the trustee. The trustee then reconciles those two facts and then sends that on to Austraclear to be secondary sold, who run their own register. And by the way, that's a bunch of sub-registers as well. So every time someone makes a payment, it pops. So before we actually get to any product innovation, which is how about we do real-time streaming of payments?
Wow.
That's not how it works now. There's huge amounts of capital locked up in the system along the way, let alone, like we've talked about before, not knowing who owns what or the quality of that asset. So you get a better quality asset, you understand the risk profile and value of it in real time, that informs the whole stack. And so we'll be originating new assets, we'll be servicing existing assets, and that includes loan servicing eventually. And we'll take that. That's what I meant by the what we call it, paddock to plate.
Yep.
So we need to start with originating it the right way, because we've had a lot of trouble. And now the regulator leaning in a lot easier makes it.
It's great.
Reduces the bar. And I think we've also talked about Project Acacia previously, where the RBA, thank goodness, has lent in and given people a lot of relief to make it feel comfortable that they can pursue their tokenization agenda, but make boards comfortable, make risk committees comfortable, make regulators comfortable. And so that's been a real big catalyst for us to do the things that people have wanted to do, but have been too gun shy to do. And so they've given us a regulatory umbrella that's allowed us to do that and demonstrate and showcase the benefits to the economy. The number's something like $20 billion in saving annually. So we need to do this. And moreover, we have an opportunity to export that amazing regulatory framework into the world. And the other thing we care about here in Australia is the $4.3 trillion in superannuation. This is the ultimate liquidity pool in the world, second largest sovereign wealth in the world. Half of it's invested here and half of it's invested offshore, but it's all Aussie dollar denominated. And so from our perspective, we want to make it possible for these people to hold and transact all that liquidity. And so that will then spill out into the rest of the world from a go-to-market perspective.
I think that, people, you mentioned Acacia there, people don't realize just how important Acacia is. And let's talk about that. And, what you've described there, both of you, is this, it's the tyranny of time and process. There could be just time alone because, hey, we don't do anything because this is just our way of doing it. But it's also the multiple steps and hops and processes that are there. But going over to the Acacia side of things, could you please elaborate on, the type of stuff that you guys are doing there?
Yes, so Tokeniser had the privilege of also being involved in Project Acacia. We had the benefit of working with both the trustee, TAF Capital, who were fantastic partners in letting us essentially use one of their funds as a guinea pig for the purpose of Project Acacia, and Macropod, who supplied and provided the AUD stablecoin, AUDM infrastructure for which we could settle against any transactions. So one of the cool things that Tokeniser did was essentially, as rightly pointed out, tackle some of those processes and payments in a fully tokenized fashion. And the goal was to demonstrate just how much quicker, safer, and more transparent those processes would be in a tokenized fashion versus a traditional style. So to give an example, we tried to essentially conduct 3 normal, common processes that exist in any fund. Those were the subscriptions. How does an investor acquire the units? They were the distributions and the redemptions. Now, what we realized very early on in Project Acacia was distributions was a problem that many people encountered, but what they wanted was the ability to enter and exit their position efficiently. And so we actually did something really cool. We substituted what would be a traditional distributions process where people would pay out and move to a secondary style swap situation where people could say, well, I want to actually swap around my units and transact with other unit holders. And therefore, the fund doesn't have to hold all this extra cash or run all these processes. It means that the unit holders are suddenly going, hey, my investment horizon doesn't have to be the same as the fund's investment horizon. I don't
which
have
it
to
is at the moment.
It is, and they're locked in. And especially when you talk about real estate investment trusts or venture capital funds, you are locked in for a long time. And so that's your capital locked away for 10, 20 years.
Locked in, but also people that are locked out that want to get participate.
Coming back to Alan's point, that's one of the key reasons why that superannuation money hasn't gone into a lot of this because they can't afford the risk of that capital being locked away for such a long time necessarily. They need liquidity opportunities. So what Project Acacia, coming back to the opportunity, was we could show via Tokeniser, essentially, hey, a subscriptions goes from a multi-day, multi-step process that's paper-based, where you essentially have to send the funds cash and hope and wait for the fund to eventually receive that cash, confirm that payment, and then issue those units. And those units are issued normally on a spreadsheet. So no one sits down, spreadsheets rule the world.
Yeah.
They'll save to sell in that spreadsheet and then sends you by email, if you're lucky, maybe by post, a certificate that says, hey, you now own units. And then you'll get a quarterly announcement about that. So with Acacia, what that meant was the investor could have AUDM, stablecoin, agree to subscribe to the fund and purchase those units at a set price. And as soon as they agreed to that, immediately those funds and those units would swap. So essentially they, in real time, as soon as they made that payment, got those units issued to them. And through the platform, they could see it. They could go on the Block Explorer, see that transaction. Fantastic. Instantaneous versus multi-day, multi-week. The other side of it too, when you kind of come to that conclusion, redemption, same thing, but in reverse. Rather than having to worry about, am I going to receive my money once I complete this redemption? They could click a button, agree to a price, and immediately have those assets swapped again. So those redemptions meant that they received the cash or AUDM in their wallet instantaneously at the same time as those units got burnt, those unit tokens. And then with the swap, what was so cool about that is that meant that unit holders finally had a means of essentially being able to say and demonstrably commit to, I want to sell my units, and like a traditional OTC market, agree to a price with another unit holder. And then without the fund having to do anything but approve that transfer occurring, those units would swap. And the beautiful thing about all of this is you could see it happen on the blockchain. So you don't have to rely on Tokeniser. You don't have to trust us. You can see it happen on the Redbelly blockchain and know that that transaction is going to occur. And that combined with the interface and the experience made it, and what we demonstrated with Acacia was that it was easier, it was faster, it was cheaper because you cut out all those intermediaries and all those intervening steps. And most importantly, the users could do it themselves. So it cuts out administration overhead, it cuts out user frustration, having to deal with that. And it just meant that the trustee could focus on what the trustee is meant to be doing, just making sure these things happen, not getting involved in it by themselves.
I think it just gets people to focus on the things they want to do and are able to now do because everything is programmable, composable, all the core tenets of blockchain now.
Absolutely.
The architecture that you guys have for Tokeniser to be able to do this, let's take a bit of a tour of the product. You walk us through the user journey, like trustee, for example, creates an asset. I think there's issuance that comes next, and then reporting, some distribution, then there's some redemption. How do you how does one visualize seeing that that flow? And on the website, for example, do you have like diagrams that showcase this as well so people can follow along?
Well, at the moment, we intend to put on much more interactive user demos and experiences. It's a real platform. It's a live platform. So we've got that running inside benefit that we're not just talking about this, we're actively doing this every day. And from a user experience, it's very much that traditional web experience. You get invited to view your holdings in a particular company or fund. You register an account, you log in, have a dashboard where you can see your holdings, see the value of those holdings. You can download statements, whether they're holding statements, share certificates, unit certificates, receive communications in the form of announcements or communications from the company or fund. And what's nice about that, and the user feedback we've gotten from our existing clients, has been that it's modern, it's fast, and most importantly, it looks and makes the issuer look serious. And shows that they care about the investor experience. And that's something that really matters to us because we know that at the end of the day, even though it's the trustees or the companies that pay our fees and subscribe or use the product, they're doing it for the benefit of their investors. And we know our real customers are those investors and getting a good experience. And likewise, from a trustee or company perspective, it's about running those processes. So having workflows inbuilt into the system where they can go step by step. First I do this, it's guided, it's prompted, and most importantly, it's done in a way where no one has to really think about what they're doing. The goal here is to go, we know that these processes are very much standardized. Just do this step by step and we'll get you to that end and you don't have to think about it thereafter. And that's nice too, because if you're running a fund and you're the trustee for a number of funds, you don't want to be thinking about, okay, where's this up to? Who last touched this? And
Yeah.
that's very much something that a platform solves for. And we solve that through systems, processes, and also audit trails. So tracking, recording, and making sure that you always know who did what, when, and why they did that. And so that's another component of the platform that's been a really big value proposition, is that audit trail, that ability to know exactly what's going on every time. You don't get that with Excel. Anyone can modify it. So that's why people
Or
do
even
Tokeniser.
Google Sheets. And I think that is a brilliant like way to put it. Alan, over to you. Where does Redbelly like fit in terms of like underpinning all of this?
I guess from our perspective, well, obviously we are an amazing settlement technology, right? We bang on wax lyrically about how fast, how scalable, how finality, how secure we are, and that's great. But we need to now prove ourselves as valuable for an asset issuer to choose, and we think this is an interesting unlock. I think the other thing that why we're excited about the kind of expansion of Liquidiser's capability is moving from equities into other alternate assets, and particularly we're focused on private credit. One, it's a big exploding TAM right now, and there's also a lot of noise about potential fraud and or challenges with the assets. So we think that there's, and if anything, bubble-esque, you might even say. So we're super keen to put integrity into that data and make sure. But to your point, one of the big holdbacks with Liquidize is equities has two problems. One, how do you discover them? But secondly, there's a price discovery problem with private equities, right?
Yep.
The information's not disclosed. Now, with these funds that already have to report a NAV, already have kind of a price point baked into how they do things, they're way more readily tradable than equities are. So we think Matt's got an amazing infrastructure he's built all the workflows, and don't get me wrong, people need to get the benefits of digitization. I want a better workflow, I want a better user experience, I want a cost saving, I want less fraud, I want less errors. That's still what people are buying, by the way. It's not, I want to buy a blockchain, I'm buying a digital experience. But below that, they actually still want the ability to trade. And the trading has been somewhat, and you guys have been working on some really innovative stuff with an AMM, but price discovery is still a challenge for that liquidity. And for us, as you know, I'm all about collateral mobility. Even if I get those things and I can move them around, if there's no liquidity, you're not going to really accept them as collateral, which is why banks kind of put private companies as $0 value in your portfolio, because they can't sell your house on you, right?
Yeah.
And so, but a lot of these other assets do have NAVs, and therefore become more tradable. That's what Redbelly's after. We're after assets that create velocity on the network and ultimately are tradable. And also these big institutional assets can get fractionalized down to access that self-managed superannuation liquidity, as an example, because currently this big stuff gets bought by banks and institutions in, hundreds of millions of dollar lots, not $10 million lots or not $10,000 lots.
Yeah.
And so there's the big unlock to get more velocity, more liquidity in better quality assets, even because in securitization we tranche that risk and price it differently, right? So the banks buy the big A stuff, which is basically fixed income, and then below that you've got kind of higher risk on first loss. Now they're highly desirable assets that people can't get access to.
Exactly.
So this way we can start that fractionalization journey, start that distribution for these high quality assets that people do want to own with good risk return ratios, but are more tradable. And that becomes the big thing that Redbelly cares about. We want transactions, we want flow. And so being really specific about the liquidity in some of these markets, just because we tokenize them doesn't make them more liquid. So we've got some good primitives to exploit, but the reality is we have to pick the right asset class to get started on. So that's why you're seeing us start to originate effectively other private credit assets. Also in the news yesterday, we've come out publicly that we're working with Wiser.
Yeah.
There's a fintech that's doing personal lending and car financing. So great, well understood financial assets. They've built over $1 billion book. And now how do they distribute or access other capitals or reduce their cost of capital? And that's where in Project Acacia with them, we're looking at what Figure did. So Figure is saying things like we can achieve 85 basis points saving in our cost of capital by doing this. I can tell you most issuers really care about that, right? And so we've done a process with them to evaluate the old way and the new way and understand that. But in all cases, you need it tokenized first. But these assets are rated, they're understood, they have straightforward returns. And so we think the better quality assets will be more tradable, and where the price discovery is kind of known or taken out of the equips really opens up how we can kind of get some better alternate markets stood up for those things.
Fantastic. And I think it's all important to have these things in place and to have Redbelly Network as the underpinning of all of that, because wouldn't be able to do all the wonderful things that you're talking about doing and planning, obviously, in the future, and can do. I just think about like superannuation, what great unlocks there could be there, and access that people could have, and for people overseas to access such a great, it's another commodity that Australia has that hopefully we don't just ship overseas, but it seems like, you know, this is the kind of thing that's needed there to help, right?
To your AI kind of theme,
Please.
generally, you know, I see a future where my self-managed super fund is compliantly and automated using AI. The financial advice is making recommendations. If you think about, you go to your broker, how old are you? What's your goals? What's your risk appetite? Okay, here's the allocation. Like, that's a $4,000 exercise to start with.
Exactly.
And then you tune them up every... I see a future where my AI is making real-time trades, managing my liquidity and portfolio without all that cost. And I have a lot more agency over how I invest, where I invest, what return, what my risk profile is or isn't. Inside, no doubt, a bunch of rules, but that becomes you know, a whole different way of moving that money around, because we kind of just pool money into funds to deploy money and manage risk, pool and share risk. We can do that now with fractional entry costs, so you can put the right amount of money at risk for that right asset and that right opportunity that you wouldn't be able to participate in because the minimum check size is whatever it is, right? So I think we can see our way to accessing that liquidity as an individual with the kind of AI unlock that comes on that basis.
Brilliant.
As an example.
I can see some really great use cases there. And speaking of more use cases, real world use cases, what the markets, like, they really want to know, what kind of assets are you seeing, say, the strongest early demand for tokenization? Is it debt, real estate, private credit? We spoke about alternatives. What are your thoughts?
So on that front, I think it's very much number one going to be that debt side. The debt markets are dominated by very traditional, very antiquated processes. And that's because traditionally it's very large institutional participants. They are not ones to change easily or quickly. And therefore it's very interesting to see that as a result, this new technology can really transform how those participants, those institutions might change their approach to it, but also enables new entrants to come into the market and really shake things up. And that's something that tokenization, we believe that Tokeniser is going to really enable, which is greater liquidity through greater access to market for more participants to transact these assets. We're also seeing a lot of interest in the, as Alan mentioned, that unit space. So we're talking about managed investment schemes or pooling. And it's interesting actually, because a lot of times what people think about when they think about investment, they think about investing in a fund. And the reason why they invest in a fund is because they want access to assets that they otherwise can't get access to. So a classic example might be you can't invest in real estate because to buy a house costs you a couple $1 million. So you invest into a real estate investment trust because that means you can invest with $10,000, which you actually have, but still get that exposure to those property price increases. But the challenge therefore is there's only a very limited set of those opportunities in the listed markets at the moment. And the unlisted space where we see a lot of this growth and opportunity for capital accumulation and wealth creation, that's locked away. And therefore what we want to try and enable with tokenization, and what we're seeing the demand for tokenization, is access again. And I think that's primarily because with tokenization, with systems and solutions like Tokeniser, there's more opportunity for investors to then exit their positions when they want to. So they don't feel the risk as much as they currently have to. And therefore more people can confidently put them and place their money into these assets, which then encourages more assets, more growth, and more wealth creation, hopefully.
Brilliant. With people that partners that want to do stuff with you guys, like how, whether that's custodians, it's the banks, it's marketplaces, even, and other businesses, can they connect to Tokeniser, let's say via APIs? Like, how do they work with you? So
it's an interesting question because yes, from a traditional web perspective, absolutely they can connect to us, and we're happy to work with partners via an API integration basis. And it's something that we've traditionally done historically with Liquidize as well previously. But the cool thing about blockchain and being on chain is that you don't have to integrate via. We're trying to create that asset mobility and that ability to essentially be in control of your own assets, make it portable, move it around. One of the cool things, another example out of Acacia that demonstrates this, is that we're working with the fantastic team at Open Markets. They have a fantastic portfolio tool that their investors can look into, see their holdings, And essentially what we've done via this tokenized managed investment scheme where people are buying units in a fund is those same investors can see those holdings on their open markets accounts because of an integration, not with Tokeniser directly, but by pulling that data from the Block Explorer.
Wow.
And so that's a really cool, very simple, but very illustrative example of the benefit that being tokenized and being on chain brings, where we can say, hey, you can use us to tokenize, but you don't have to use us for your portfolio management. You don't have to use us for necessarily, for example, if you're someone who wants to collateralize, a third party, someone else could do that. To build on the Wiser example, you could have your car loan on Wiser, but that could be used and paid for by your distributions coming off a unit token issued by Tokeniser. That's the dream, and that's what we're building towards.
Well, you mentioned open markets there, and I know those guys, they're doing some amazing stuff. It's one of those Web 2 companies that is coming more and more, and they've realized with their vision that they can see where the future is heading with all of this. So that's brilliant. You guys are doing stuff there. Alan, why does this matter for Australia and the region? And I'll come back to you, Matt. Like Tokeniser's position in Australia with Redbelly, the emerging global RWA landscape. Why does all this kind of stuff matter?
Look, I think everyone should have more control over their more financial agency and access to the right financial product for them. If you think about how it works, you kind of have, if we think about hyper-personalization, right? You don't have hyper-personalization. Someone in an ivory tower somewhere determines a thesis or a strategy and packages up a bunch of stuff that is the best bad fit for your requirement. Right?
Absolutely.
And so what this will allow us to do, as I said, deploy capital more efficiently. So if you think about why the private credit market's exploding, it's because the mandate for banks is so narrow now. So capital isn't getting to the riskier value creation, whether it's construction or getting businesses out of the ground. So we need to be able to get capital more efficiently deployed. And it's not, oh, I can only deploy $50 billion checks. So, you know, what can I deploy into?
Have you got change for a 50 billion?
Yeah, exactly right. Exactly right. So we need to be able to get capital in and to power productivity and to power innovation in the economy. And we need to be able to cascade that down efficiently. And that's what these rails do. And ultimately, we want people to have more agency over what their risk appetite is and what they want to invest in and where they think they want to seek returns. And another big thing Matt always talks about, so I'm going to steal his line here, is the big thing that we get locked up in these things is your investment horizon and the fund horizon or the assets horizon. That liquidity doesn't match.
Exactly.
And so if you think about what banks are doing, they're writing 30-year loans.
Yes.
They're writing 5-year personal loans. They've got credit card opportunities, and then they've got to manage liquidity in case you want to buy a cup of coffee.
Yeah.
Right? But that's basically their role. Their role is managing long-term liabilities with short-term liquidity. That doesn't need a centralized entity to do it in the future. In the future, we unbundle all of this, and my AI, we've talked, I don't expect mum and dad to manage the liquidity, but it's not difficult. I mean, already in the banking apps, right? Your internet bill's coming up, your mobile bill. AI already knows what's coming and what my liquidity is going to be required. And it historically knows where I spend and when my pay comes in and whatever. It should be making sure that it's maximally allocating that capital efficiently, right? Think of it, your own AI treasury manager, to make sure that I'm invested and still want to buy that cup of coffee in something that's making me more than what we're not getting in the banks. At the banks, we get less than cash rate. They're taking risk on our money and we're getting less than cash rate. So I think that gets unbundled. And I think we ultimately want to have that collateral mobility and the liquidity optionality to get in and out of, and have a way of better matching the long-term and short-term horizons for that capital.
I love it. And we're getting to the end of the episode here, and we'll put links and all that kind of stuff in the show notes. But what does the future roadmap look like for you, Matt? You know, for people that are just like hearing this for the first time, it's all exciting stuff. It's great that you've actually been out there doing it. It's not just we're announcing a new project. This is something that's been existing and continues to, and will be even better with Redbelly. But yeah, what do you see that future roadmap looking like?
So the immediate future is very much scaling up what we've demonstrated with Project Acacia to commercial use cases. And that really means launching and rolling out our solution with funds in Australia. So we're hoping to achieve that as a first order priority. And then from there, expanding that asset base beyond units and shares in companies and to private credit into other forms of alternative assets. In parallel, what we want to try and achieve is two things. Number one, those opportunities for liquidity and illustrating and giving the market the chance to see what works best for them, because what might work for one fund could be different to what works for private credit.
Of course.
Maybe talk to those examples. I think that's helpful. As
absolutely.
People in DeFi probably get it, but I think you've got quite a good plan around the right asset with the right liquidity approach.
Absolutely. And I think as Alan rightly mentioned, so for some funds, so for example, with the Project Acacia, it's very much OTC style. Let's agree to a price and let's do a direct swap. That's fantastic. We have a traditional version called an off-market transfer that takes all the risk and counterparty risk, settlement risk out of the equation.
So what we should point out on that one is that is a digital asset fund, right? Which means it's got liquidity built into it. So you can easily redeem against that. In fact, one of the big things that Matt did was get a real-time NAV, so you can actually redeem and subscribe against the real-time value of that fund.
Brilliant.
So this is what the future looks like, but in a digital asset format. And we can do that when the underlying is already liquid and tokenized, and that they know they can manage liquidity completely autonomously. Amazing. And that's what the future will look like for everything. But for the moment, it's a really good showcase of the future, what the guys at JLC have been doing. But ultimately, we think that, I've lost my own train of thought there. But yeah, I'll let it go. But what was your kickoff point? Sorry.
So very much coming back to ways of we can create liquidity for these asset issuers. So OTC swaps being very much a very token version of what was traditionally a very paper-based process in off-market transfers. We're looking at opportunities around inbuilt auction pricing mechanisms. So enabling a group of potential buyers and sellers to put in prices in a blind auction style method, and then having a closed day where people instantly swap based on what the match prices are.
Interesting.
Another example is the AMM style liquidity pool, what we've seen very commonly with Uniswap, but very much designed around and made for these particular markets. So the benefit of a fund is it has a NAV, but again, liquidity is an issue. So how do we match that liquidity risk with the opportunity for people to transact? So giving different ways of transacting, giving different opportunities for those issuers to decide what works best, because an auction model works really well for debt. Because that lets people assess their own risk and come to a view of what that pricing might be. Whereas an OTC style swap might work really well for a much smaller bespoke funds, because there's not many participants. It's very, very much something that only a few people might want. So that's very much number 2 in our roadmap after rolling out and expanding our asset base. And number 3 is expanding that collateral mobility and giving more opportunities around collateralization and giving more opportunities to alternative ways. Selling the asset isn't always the answer to liquidity. And that means we want to be able to use that Redbelly network integration to allow our users to essentially do more things with the assets they currently hold. And that's appropriately where we think the world is going, and why Tokeniser exists is to essentially set the platform up so those opportunities can come forward in the future.
Brilliant. Well, there's a lot.
That was just my point I was trying to make, because that has an underlying liquidity in that fund. But what Matt's doing is making sure that he's got the right price discovery and the right liquidity option for different assets, right? So it's not one hat fits all. The different profile of pricing discovery is going to change how you interact with it. And so that's why Matt's going to have that service catalog, if you like, of what's the right, to your point, you don't want to sell it, you want to lend and borrow against it. You don't want to, if someone's going to market make that one, or it's got underlying liquidity and we can turn distributions into a buyback. All these things are now possible based on the type of asset. And so having all those different bespoke options, I think, is a really big unlock to let people trade the way they already do trade, rather than trying to think everything has to end on an audible.
Yeah. Amazing. Well, I think that there's going to be a lot of people that are finally getting to discover Tokeniser with the background of Liquidizer and all the great things that we're going to be able to do. More interviews, I'm sure, are going to be coming, and announcements, and congratulations on Project Acacia.
Thank
you so much for joining us in studio, and we'll see you guys again soon.
Very much. Thank you for your time. Go to tokeniser.com to learn more.
Yo. Yo. Redbelly insights, the Partax flow. Expert guest knowledge, watch the wisdom grow. Open markets, that's the motto, loud and clear. Track 5 meets the 5, banish all the fear. Redbelly, serpent in the grass, shedding no skins, moving real fast, bridging the gap. future in this bite. Red belly network shining never so bright. Yo, centralized chains, now we ain't playing that game. Decentralized dreams, shouting out the name. Partners on deck, stories they unveil. No more closed doors, just a financial trail. Red belly, serpent in the grass, shedding no skins, moving real fast, bridging the gap. Future in this bite. Red belly network shining never so bright. Yo, screens gleaming, vision so keen, capital flowing. A brand new scene from the outback whispers to the global stage. Red bellies turned in a brand new page. Red belly, serpent in the grass, shedding no skins, moving real fast, bridging the gap. Future in this bite. Red belly network shining never so bright.